none of us can gauge in advance what policy announcements are going to be or the manner by which we get them, other than assuming they will come via social media posts. So I wouldn't try to game that. What we can do is gauge the so-called setup. So I think the setup heading into April 2nd was one of, to use the word again, complacency. And that meant that you had more downside when you got what was very negative news on April 2nd of much more significant tariffs than what had been built in as a base case. But then a week later, literally a week later, at those intraday lows on April 9th, the setup was one of washed out sentiment, washed out breadth. Market was incredibly oversold. So you get what was really just incrementally positive news with the announced delay, not a never mind, we're not going to put these tariffs in place. That was enough to start to power the market higher. So now, as I think, as we head into July 9th, the setup is one maybe not of extreme complacency, froth in the market, but maybe a little bit of a risk to the downside if we get some sort of negative catalyst. It's also the case that where there's might be a positive catalyst, which is second quarter earnings, analysts may have yet again set the bar a bit too low, given that they didn't extrapolate stronger first quarter earnings into estimates for the remaining 3 quarters. But by the time second quarter earnings season starts, we'll ostensibly know what has happened on July 9th. And I think corporate outlooks in that backdrop will be incredibly important. So to me, that's the next big potential sort of narrative change, is what happens on or around July 9th.